Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, good to be back.
John, this coming weekend you'll be presenting at the Metals Investor Forum at the Rosewood Hotel in Vancouver. What message do you plan to give your audience?
Well, when I was there in January, I expressed concern that we had slid back into a bear market after that brief interruption in 2016, that cannabis and crypto blockchain were basically hoovering up all the risk capital that was in the system. But I expressed optimism that as we head into the second quarter towards later in the year, the resource sector should get its turn. We are somewhat late in the business cycle, but we are at that point where we have a major stimulus in terms of a tax reform in the United States where demand should go up. The global economy was continuing to improve despite all these rumblings of a global trade war that Trump wanted to unleash. But when I'm going to be standing in front of the audience, I'm going to have to admit that the way everything has evolved, I think we are stuck back in a bear market. That's now going to be 7 years running. Everything is pointing towards a global downturn, which is not going to be good for metals, will not be good for gold in the interim. And therefore, rather than just pack up and go away, I'm still committed to the resource sector, and you really have to focus on precise stories that are, in a sense, independent of the gathering gloom that's afflicting the junior space. And part of the message is going to be that I see three possible directions that Trump policy can go. The worst one is the direction that's already being pursued right now, which is to wipe out the rules-based global order of globalized trade, where you assert the biggest, toughest country in the world gets to make the rules for everybody and follow them when they please. This is happening right now. There appears to be a bit of a stall in this escalating trade war with China. We'll see how this all plays out. But in this scenario, I see the rest of the world ending up with no choice but to work around the United States, to ignore it on Iran, for China to just say, okay, we will match all your tariffs with similar ones, and if you're going to pull the plug on our company ZTE that spies on your country and steals your technology, well, there's just no way we're going to stand down and give up our goal of being eventually bigger and better than the United States. And I think all of this, coupled with possibility of not just an economic trade war, but also military conflicts on the Korean Peninsula, that's no longer looking so great for a possible peace prize for Donald Trump. And, of course, unleashing the Sunni and Shiites against each other in the Middle East, putting Iran's back against the wall. None of this is really going to be good for the United States or the world. And so one scenario is for the United States to retreat back into itself, to build a wall around itself, to pursue self-sufficiency, and stimulate interest in the finding resources within its own country. Now that's the worst case scenario. I'm calling that the back to America scenario. Other scenarios that can stave off a general bear market for metals is one where in November the Democrats retake the House or the Senate and basically force the Trump administration to stabilize its goals and return to some sort of normalcy. And that could be good for gold because then the Democrats will be blamed for all the things that are going to go wrong anyways. And a third scenario is one where we end up with, Trump has a stroke while he's doing one of his really angry tweets and ends up debilitated, and maybe they'll swap in a double like they did in that Dave movie back in 1993, who starts doing sensible thing, Of course, that's not going to happen. They'll swap in Mike Pence, but he will end up towing the line as more establishment Republicans start to assert themselves, and out of that will probably come a scenario where the two-party system breaks down into three-party system, where you have the sort of what the Republican Party has become, the right-wing populist fringe with the evangelicals and neo-Nazis and all those other types in there. And then there'll be the Democratic Party with the Bernie Sanders types. And then there'll be a sensible middle of Republicans and Democrats who want to preserve globalized trade and somehow negotiate a future where China and the United States respect each other, and the United States does not stay as the superpower that gets to tell everybody else what to do. And that scenario is one where also one can see the global economy stabilizing, continuing to grow, and this anxiety, this gloom that everything is going to fall apart and will land in a recession, maybe even in a depression, and even a dysfunctional state of war and local civil uprisings, even in the United States. All of that will vanish. We'll get our resource juniors back on track, and we'll do really well. But the pick at this conference that I regard as my Back to America pick is the Mineral Mountain Resources. With its Rochford project in South Dakota, it's now started the fourth hole on a program, 12-hole program to find another homestake-style deposit, 40 million ounces. It's almost synonymous with America's past greatness in gold mining. That mine, of course, is now depleted and shut down. And I think that if this current Trump policy trend continues, we will start seeing a rising American interest in exploration in its own backyard. We will see the not in my backyard obstructionism for permitting drill programs pushed back, and it'll be for both gold and for resources, for metals, both base metals and specialty metals. There's a lot of untapped potential that hasn't seriously been looked at in the past 20, 30 years because we've had cheap metal prices due to places like China that are willing to be the world's toilet by producing rare earths and such super cheap. I think that we will see a trend of American risk capital. The Americans haven't really gotten into the blockchain or the cannabis the way the Canadian investors have. So there's a chance we will see this U.S. capital start looking for companies that have exploration projects, development projects in places like Arizona, Utah, Nevada, South Dakota, maybe even California on the eastern side of the Sierra. And that's the key part of my talk, is this idea. Look for companies like Mineral Mountain, which have the potential to attract what will still be a very large capital pool.
John, for now, at least the U.S. dollar is charging ahead against most currencies, especially those from emerging markets such as Brazil, as capital flees back to the U.S. China has threatened to retaliate against American tariffs by imposing tariffs on agricultural products from states that represent Trump's base, such as those which produce soybeans. How does this situation affect one of your picks, Verde Agritech, which hopes to replace a good part of Brazil's potash imports with a domestic source it controls?
It should have a positive effect on Verde Agritech, which controls several billion tons of glauconite, a silicate based of potassium, which we've talked a fair bit about in past episodes. And it's the company's goal to quarry this material, grind it up, and sell it as super green sand, no chemical processing, it's organic, and have it displace part of the country's reliance on potash imported from places like Canada and Belarus. Now, the falling Brazilian real, this is a problem for Brazilians. It's going to create inflation for them. The country is struggling to overcome its corruption. We have a populist military evangelical type leading in the polls. De Silva is sitting in jail, so he's probably not going to be voted. And Temer has, it seems the Brazilians are incorrigible in that they just can't avoid getting messed up in corruption issues. So So he's got a problem also. So the country, has its problems of potentially marching not towards greater democracy, but back to the good old dictatorship days. But for the farming industry, it is still the backbone of the country. And yes, they are a very big soybean producer, and they have lots of arable land that has not yet been developed. And China could very easily prop up Brazil with all its problems, and instead of taking on American soybean crops, it gets the supply from Brazil. But the rising or falling Brazilian currency against the U.S. dollar does make potash more expensive to import, because right now the potash price is still stuck around $210, $225 at Vancouver port per ton. And of course, by the time it's delivered and reloaded and transported, it's even more in Brazil. And it has this headache that because of the torrential rains in Brazil and its acidic soils, a much bigger portion of the applied potassium chloride gets washed away than it does in places like the United States. So the government is going to see greater wisdom in supporting this junior's efforts to get farmers to start applying this super green sand material to the fields. It'll reduce the reliance on imported potash, and because their costs are fixed in Brazilian currency terms, they get to benefit from a larger margin or even undercutting the potash price, because their current strategy is to price their product so that it is similar to potash, and that while still giving them a decent profit margin. But now they will be able to accelerate the adoption of it by making it cheaper as the imported price of potash goes up as a result of the decline in emerging market currencies. Plus, of course, the increase in the price of oil, which is the medium by which potash is transported around the world. That is probably going to have a positive effect for for Verde Agritech's Super Green Sand project.
We'll have more with John Kaiser right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Donald Trump has pulled America out of the Paris Climate Accord and is pushing hard for increased fossil fuel combustion, be it through lower fuel efficiency for American cars or burning more coal to make electricity. Will this crimp the electric vehicle mania that has gripped car makers and slowed down the cobalt boom?
We should take a look at China when considering this question. Everybody thinks electric vehicle mania is about reducing carbon dioxide emissions so that we can slow down climate change in the long run and avoid all the consequences that come from this. But one of the big issues people have raised is all these cars plugged into the electricity grid are going to be sucking electricity, which is powered by what? The Europeans, or at least the Germans, have decided nuclear energy is bad and pulled the plug on their nuclear power plants. So there's a form of relatively clean energy in terms of carbon dioxide emissions that's gone. So what do the Germans do? Well, they import coal from Poland and are busy burning coal to power their future fleet of electric vehicles. China itself is not shifting away from its goal of becoming the world's leading electric vehicle fleet. It is pushing hard for adoption of electric vehicles, and then they have adopted nuclear energy, and they will have lots of nuclear power plants coming on stream, but they also have an enormous coal-powered grid. So the electric vehicles in China are not going to make much difference as far as carbon dioxide emissions are concerned. So this whole thing about climate change, it's not really what it is all about. In China's case, its problem is its reliance on imported oil. It doesn't seem to have the right rocks to support shale oil extraction, or even generate an awful lot of natural gas from these tight rocks, so that they could shift to some sort of natural gas powered fleet. They are shifting to electrical vehicles because they have lots of coal and can continue to make that electricity regardless of what happens to the price of oil. And the price of oil is probably going to go up over $100. Venezuela, which just had an election that was anything but fair, its oil industry doesn't even need sanctions. It's imploding all on its own due to lack of investment. It'll be a long time before that problem gets turned around. Iran is being put offline. The United States, with its pulling out of the Iran nuclear deal, they basically said, we're annoyed that you're out there in the Middle East, meddling in Yemen, in Syria, in Lebanon, causing all this trouble. We want you to back off, and we are going to shut down all your ability to export or pull in development dollars unless you toe this line. But in the middle of this is Saudi Arabia and Iran squared off against each other. Saudi Arabia now has a bigger military budget than does Russia. If all hell breaks loose in the Middle East, that's going to mean higher oil prices, a long-term disruption of supply. It's all wonderful for the United States because at $100 oil, all their shale oil can really start cranking again, and they'll probably ban exports so that oil ends up capped at, say, $100, so that the American drivers with their gas guzzlers don't suffer as much as, say, elsewhere in the world. But elsewhere in the world, as the United States basically abdicates its role as the peacekeeper of the world and says it's everybody for himself, and to hell with you if you're not supporting us, oil is one of the energy commodities that they have incentive to abandon. So China has been making major investments in lithium. They just bought a stake in SQM, the Chilean producer, for $4 billion. Cobalt is a necessary part of the lithium-ion battery. So the demand for cobalt is not going to go away. In fact, it's going to increase down the road if indeed the global oil supply infrastructure gets destabilized as a result of the United States pulling back into itself. So my pick at the Metals Investor Forum is Namibia Rare Earths, which is soon to be renamed Namibia Critical Metals. It has the Kunini project acquired earlier this year in northern Namibia. This is in an area where another company, an Australian company, Celsius Resources, has already outlined a very important cobalt resource. Namibia is at the opposite end of the corruption stability spectrum in Africa from the Congo. And not only does Congo have problems with corrupt characters like Dan Gertler and Gekamen's in bed with Kabila, it also now has a resurgent Ebola problem. And because it's such a dysfunctional country, I'm not sure that this time they'll be able to contain that problem. So looking for a supply of cobalt in a place like Namibia, which is relatively secure and stable, that is a strategy that fits well with all these negative trends that I see out there.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, one of your Metals Investor Forum picks is Eagle Plains Resources, a traditional prospect generator farm-out junior with a focus on Western Canada. How does Eagle Plains fit into your big picture scenario?
Eagle Plains does, in fact, not fit in with all these big picture scenarios where security of supply are going to make some metals go up and concern about the U.S. dollar losing its status as the global reserve currency a lot faster than need be sends gold soaring. No, it is almost more of a nostalgia pick for me because it represents what I experienced during the 80s and 90s when you had a Canadian junior. It had Canadian projects that would generate these plays. It would farm them out to other juniors who would raise a bunch of money. There'd be a lot of excitement about the drill play coming up. There'd be rumors about, does the core look good? What's happening? Those were the decades when brokers still played an important role. They were the sort of gateways of information. The internet wasn't really out there yet to be a place where you could find out everything that was available in the public domain, and which makes it also easy for the regulators to sniff out any rumors and shut them down quickly. But that age has gone due to structural changes in the brokerage industry, the arrival of deregulated commissions where you could discount brokers could come in. That undermined the role of the broker as somebody who could get a transaction-based commission in exchange for his or her ideas and insights. Now the industry has shifted more to a fee-based asset management system where the goal is to preserve the capital, and the regulators have gotten involved by declaring the age 55 as a special demarcation age. There is an expectation now amongst the boomers of extraordinary longevity, 90 and beyond, and if you've hit 55 and you're close to retirement or perhaps already retired, you probably don't have enough money to take care of yourself for as long as you're going to be able to live, even in a relative welfare state such as Canada. And so the regulators have created this suitability requirement where a broker certainly can't recommend a high-risk junior like Eagle Plains to their client because, of course, it has a better chance of not succeeding than it does of succeeding, and therefore loss of the client's money. But it's so bad that they can't even accept an unsolicited order from that client. So we have the investing public that's over 55 moving off to into the discount brokerage firms where they're basically on their own, relying on the internet to get their ideas, having to generate their own excitement. There's nobody that they can really talk to that speeds them up about, wow, this Iron Range project, this IP anomaly is really exciting that they're going to be testing in June. When you have the public needing to generate its own excitement, it doesn't really happen. And the other half of the problem is the people under 55, in essence, a lost generation. They're probably trading cannabis and blockchain stocks. They don't know anything about the resource sector. They don't know how to think about it. The regulators have established a system where the disclosures aren't allowed to quantify what something is worth until there's been millions of dollars spent on an economic study. But for greater fool spiral stories such as cannabis and blockchain, that's no problem because nobody can ever prove that what you said was incorrect. Whereas with the resource sector, everything ends up being real and fundamental. And at the end of the day, what you hoped or thought was there, you'll be able to determine whether or not it is there. I think we will get back to an older style of exploration speculation. I've put all of Eagle Plains' dozens of projects into my website, Kaiser Research, online. You can click on the profile and see them all, see where they are and what it is that the company's doing. And I've also ported them into the Share Collective, which is a new system that allows people to quantify the potential outcome of what could this Iron Range project, the Talon target, which Eagle Plains plans to drill, what could it end up being worth? What do they think is there? And what do we need to see to know we're onto something? This will eventually turn around this sector. It'll enable the younger people to quickly get up to speed on how to gamble on exploration projects. It will be in these giant online communities. People will be speculating and arguing about what do these numbers mean. It'll be highly contextualized, and it'll be very different from what it was in the 90s, 80s, and earlier, where the brokers themselves didn't really understand what it meant, where it was all a game of just whispering, oh, this is going higher, there's new money coming in. Now it'll actually be based on quantifying what does it mean. And that's a big result of the 43-101 revolution that came in after BRIEX, where the whole disclosure policies changed substantially, and the juniors went from just generating geophysical and geochemical targets and poking holes at them to actually demonstrating the feasibility of projects, enabling them to stick with a project for a lot longer. So Eagle Plains is there as kind of an old-fashioned prospect generator farm-out junior. They do like the Iron Range target that they generated with their new IP survey, so much that they're using their own money to drill several holes to test to see if they have a big picture story on hand. And they own 20% of Taiga Gold, which they just spun out as a separate company, and it has SSR starting on a major 18,000-meter drill program to test this 7-kilometer-long structure on the Fisher project in Saskatchewan that also hosts the Santoy and CB high-grade mineralization. And the hope is that this stock, which is now trading in the 15-20 cent range, ends up having a major discovery, gets taken out for its 20%, and then Eagle Plains gets properly cashed up as a result of the 20% stake it kept in Taiga Gold.
John, the last thing you have on your Metals Investors Forum group is Lorraine Copper, which a year ago you described as a group of hillbillies who loaded up their pickup with rocks and maps before trundling off to PDAC. The stock has since managed to double. Where does it go from here?
Well, I didn't actually call them hillbillies, but Bill Morton says that's in fact what I meant by the way I described them. The phrase I use is toiling geologists. The Eastfield group, of which Glenn Garrett and Bill Morton are the key people, they have been in the junior sector for decades. They are the kind who really do not know how to promote, but they always do good geology. They do their homework. They generate these prospects, and their companies they've managed from the Eastfield Resources that was around in the 80s to spawn several companies, one of which ended up being absorbed and became Spanish Mountain. They've managed to keep this group relatively intact without the hideous recycling of rollbacks that a lot of Vancouver's more promotional exploration groups engage in. And what I like about Lorraine Copper is they were sharp enough to notice that when this Stardust project north of Serengeti's Kwanika project became available, over $10 million in historical dollars spent on it, they were able to do a deal with the junior that wanted to shift into marijuana and do something else, because the key person behind the obsession with the Stardust polymetallic system had passed away. And so they ended up doing a deal, issued 5 million shares, acquired this, but of course because they weren't promoters, they weren't sure what to do. So then comes somebody from Vancouver who's actually at the opposite end of the geologist spectrum. I call him a rampaging geologist, Mark O'Day, who through his Oxygen Capital Group has had quite a few successes, of which the most notable was Frontier, which sold the Long Canyon project to Newmont for $2.3 billion. And they ended up doing a deal with Lorraine Copper whereby they would get 100% of the project by spending $6 million or so. But when this was done, they would have to issue 30% of their issued stock, so that Lorraine Copper ends up with an indirect 30% interest. And of course, if they have been successful in demonstrating that there's 5 to 10 million tons of this high-grade material of copper, silver, zinc, gold, instead of the 3 million tons of it that's so far been outlined, then this will be acquired by somebody, and it'll end up being a big score for Lorraine Copper. And the company that Mark O'Day is in charge of, it's Sun Metals Corp. It started trading on May 8th, and it raised $6-7 million at 25 cents. It's actually cheaper than 25 cents, which tells you even for a rampaging geologist, this market has become very bearish. This is a tough market, but this project is extremely interesting. There's been more geophysics done. There's an awful lot of potential that still remains to be explored. It is a fresh set of eyes from two teams of very, very competent geologists who are looking hard at this project. There'll be $6 million spent this year on it, and if this doesn't deliver a significant expansion of what is already known about this resource that's likely to be underground mineable, well then Mother Nature is also conspiring against the poor junior resource sector.
John, looking forward to seeing you at the Metals Investor Forum in Vancouver this weekend.
So am I, Jim.
I've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.